tariffs, 25% on Canada and 25% on Mexico, and that'll start.
This new Trump tariff policy is going to be very impactful to the U.S. economy. So estimates suggest that the 25% tariffs on Canada and Mexico will increase prices for Americans by about $1,200 per household. That's a $1,200 decrease in annual income per every American household. So this is really large taxes on our three largest trading partners. This will massively disrupt supply chains. A lot of people will be laid off. This will increase prices, and this will be detrimental to the U.S. economy. The only way that another country can pay those tariffs or be responsible for those tariffs is if those countries lower their prices by the amount of that tariff. Generally speaking, countries do not do that. Firms do not do that. We are forced to pay that tariff. So generally speaking, we will pay for these tariffs. Even though the PRC is a large trading partner, supply chains are not nearly as integrated as they are with Mexico and Canada, right? So every single car that's made in America is really a North American produced car. Parts of that car are produced in Canada and Mexico. Your average car crosses, or parts of that car cross the borders between Canada and Mexico 7 or 8 times before the car is finally produced. So, this is going to be massively impactful to the economies that border Mexico and Canada. There's a lot of companies, a lot of Japanese companies, Korean companies, European companies who produce in the United States, right? And producing in the United States means that you produce with inputs from Canada and Mexico, right? So European firms, especially say auto firms and Korean, Japanese, European auto firms, they're going to be harmed by this. The broader concern too is, what does this mean for future trade policy? Again, the tariffs on Canada and Mexico, there's very little economic rationale that you can provide for these tariffs. So if this is the type of policy they're going to be considering, our other partners are going to be wondering what could come next. It's going to hurt the U.S. economy, and there really is no upside here. You could certainly argue, there's one other argument for tariffs is it generates revenue, right? That's one thing that the president has stated, so as the Treasury Secretary and the Commerce Secretary. This is a minor source of revenue. The U.S. government gets about 1.5% of total revenue from tariffs. It's a rounding error, right? We would need a tariff on all imports into the United States of more than 50% just to close the budget gap. It's not a good source of revenue.
In terms of Canada and Mexico, that's been a huge overhang for the Detroit Big Three, the automakers. If this lasts more than 6 months, it could add $4,000 to $5,000 per car. That's been a gut punch to the likes of GM, Ford, Stellantis. The difference now is the AI revolution. The AI revolution, this tech trade, is so cemented around chips. And that's why with things like export controls and all the things going on with China, this has been a little gut punch for this market, a lot of uncertainty, and everyone trying to figure out this game of high stakes poker, what's next.